Hi traders, this is Gomathi Shankar. I am very happy to meet you all in a new video. So in this video, we are going to talk about penny stocks. So recent time, the market has hit all-time high. So most of the large cap companies and even mid cap companies are at a expensive price. So now beginners and new investors are feeling that most of the companies available in the market are expensive. So why don't we choose a penny stock? So this is a common habit among the new investors. Whenever they enter into the market, they feel the existing companies are expensive and so they try to invest in penny stocks. It might be like a do or die situation. Either the stock will outperform or either the stock will underperform. So there are chances your capital might double and there are even more chances your capital will be blown away. So in this video, let's see a detailed discussion about penny stocks and multibaggers. What is a penny stock? A penny stock is a company which is trading around 5 rupee or 10 rupee or less than 20-25 rupees. So this is called as a penny stock, which is mostly affordable by everyone. And most of these stocks will be having a very low market capitalization. Now, if you check the top large cap companies like TCS, Reliance, Infosys, HDFC Bank, their market cap will be very higher. Whereas if you take any penny stock which is trading around 10-20 rupees, their market cap will be less than 500 crores. So these are the qualifications of a penny stock. And another important thing, in every penny stocks, the number of buyers and sellers will be very less. If you look at the market depth, you will be identifying it. So what does it mean? In that particular stock, only a very less number of buyers and sellers are interested to have a transaction. So these are the symptoms of a penny stock. So they will be priced very low. They will be having a very less market capitalization and there will be very less number of buyers and sellers in the market depth. Now what is a multibagger? Now let's say you are buying a company around 10 rupee and if that company doubles, keep on doubling, like it is going from 10 to 20, from 20 to 40, from 40 to 80, from 80 to 160, from 160 to 320 and so on. So this is called as multibagger. So a stock which is capable of multiplying large number of times is called as multibagger. So generally what people think is, now let's say I am having a 10,000 rupee and I wanted to invest in a stock market. What if I buy a 10 rupee penny stock? I am buying 1000 shares. I am just investing 10,000 rupee. So even if it is in a loss, it's not going to be a big loss for me. So this is what most of the investors they think. And in this way, they will be investing in penny stocks. Now, if we check their portfolio, almost their entire portfolio will be in penny stocks only. And like this, they will be investing in 10 to 20 penny stocks. Now, if we check their overall portfolio, their portfolio size will be close to 1 to 2 lakh rupee. And all the 10-20 stocks in their portfolio will be a penny stock. Now, this is seriously dangerous for an investor, especially for new investors. Penny stocks are like a salt which we are adding in our food. In our food, we add only a pinch of salt. So same way, in our portfolio, we should have only a small amount of penny stocks. Just like we add salt into our food. Our portfolio should be diversified. We should have a mix of large cap, mid cap and small cap companies. And we should have index funds, we should have debt funds, and even we should have government funds. Like this, our portfolio should be diversified. Now, in our portfolio, in this portfolio, if we are having few penny stocks, then it is advisable. But instead of this kind of a portfolio, if you are having a portfolio full of penny stocks, then it is a risky bet. There are higher chances you will lose your entire holdings. This is not realized by most of the new age investors. There are many penny stock companies which have performed very well in most of the cases. Now let's say MRF Tires. MRF Tires came for an IPO around 11 rupee and it was a penny stock once upon a time. And now MRF Tires is trading at more than 1 lakh rupee. Like this, we can give a lot of examples for all the large cap companies which are trading now in NSE. So all the large cap companies were once a penny stock around 20-30 years back. So a stock which is trading right now at a penny stock level could be a large cap company after 30-40 years. So if you are capable enough of identifying a best penny stock right now, you could possibly be a crorepati after 30 years. So if you are able to read the financials of a penny stock, or if you are able to get a good financial advice from a registered investment advisor, you can also invest in a good penny stock companies. Now let me share my personal experience. I bought Praj Industries around 2018, which was around 50 to 60 rupees. And then what I did around 2019, I sold my holdings of Praj Industries around 170 rupees. And right now you can check Praj Industries was trading at more than 300 rupees. So this is my personal experience with a stock which was trading less than 100 rupee. Now, like this, there are plenty of opportunities in penny stocks, but if you are investing in that without any proper financial knowledge or without any proper guidance, then you could possibly blow up your account. I hope you found this video useful. Share it to your friends. Let's meet in another video. Thank you.